Good morning and welcome to the Killik & Co market update. In recent years, there has been growing criticism of the level of monopoly power that some big tech companies in the US currently enjoy, and a number of politicians have been quite vocal about the fact that they would like to see some of these big tech companies being broken up. In recent months, the Federal Trade Commission has brought a lawsuit against Facebook, citing that the company has market share of over 60% and specifically saying that it would like to see Facebook selling off Instagram and WhatsApp. However, this week a judge has thrown out the case, saying that not enough evidence was given to show that Facebook does have a market dominance with a 60% market share, and furthermore it made the point that Instagram and WhatsApp were acquired back in 2012 and 2014, and therefore if the Federal Trade Commission had a problem with the acquisitions, it should have raised those issues closer to the time. What this really shows is that the US antitrust laws, which were designed to govern competition in the country, are really not designed to deal with social media, and it's likely that it would be very difficult to break up big tech under the current laws, and therefore if big tech companies are to be broken up, a change in the law would be required first. On the news that the Facebook lawsuit had been thrown out, Facebook shares rose by 4%, giving the company a market capitalization of over $1 trillion for the first time since its IPO in 2012. If you bear in mind that Instagram was acquired for $1 billion and WhatsApp was acquired for $19 billion, both of those acquisitions look like very good value in comparison to Facebook's current market capitalization. The oil price has been rising steadily over the last few months, and at the moment it's over $75 per barrel, and that really is quite a big rise from the lows of last March when it went below $20 per barrel. This week, OPEC, which is the cartel that controls about 40% of global oil production, met up to try and agree on future production targets. However, they have currently failed to reach an agreement. Production targets are important because they impact the price. OPEC on the one hand wants the price to be high so its member countries can make as much money as possible. However, if the price is too high, other producers such as shale operators in the US will come on stream, and that could cause OPEC to lose market share. We've been watching the agreements very closely because the oil price is still an important factor into many processes within the economy, and furthermore it does have an important impact on inflation, and inflation is very much in focus at the moment. We've already talked about the latest inflation readings in the US, but let's have a look at them again, and let's look at the constituent parts that go into that inflation reading. So we've already said that the latest inflation reading for the 12 months to May was 5%, and that was quite far ahead of expectations. But if we look specifically at food price inflation during that time, it was only 2.2%. But if we look at energy, it was 28.5% over the last 12 months. So that was really important in boosting up that inflation reading. If we remove food and energy from that 5% inflation reading, the overall reading comes down to 3.8%. So you can see that this rise in oil is having a really big impact on the inflation reading. So any decisions about production that OPEC do make could potentially have an impact on the future inflation readings in the US. And finally this week, Primark has released an update that was far ahead of expectations. And this was interesting because it shows that there is still an appetite for shopping in person rather than just shopping online. Primark only has physical stores, it doesn't have an online presence. So Primark really suffered during the pandemic because all of its stores were closed and it wasn't making any sales at all. In fact, the headline was that Primark had lost over £1 billion worth of sales during lockdown. However, over the course of this year, it's gradually been able to reopen its stores and people have been flocking back to them. You've probably seen pictures of huge queues outside of Primark, and that has led to record sales. As you can see by the chart here, back in February, just 22% of Primark store space was open, but in June it was able to reach 100%, and sales have really picked up since then. And in fact, Primark has been able to take market share because so many competitors have actually gone bust during lockdown. So it's not all bad news for physical retail stores. Moving on to have a look at next week, it's fairly quiet in terms of companies reporting, but we are expecting results from Ocado. That's it from us. Enjoy the weekend, and we'll see you next Friday.